Hey everyone, welcome back to the channel. This is your weekly review for July 6th through 10th. Let's start with the ideas from the past week. On WTI crude oil, you could have caught a good continuation of the move down if you were following oil last week. The British pound also ran into the zone that was up here on top and couldn't break through it last week. The Japanese yen performed well both on the futures and on the spot. It gave a good reaction off the options, and there was confirmation there too from a good zone with the range projector. And on the spot, it also worked a zone off nicely, twice. Also on Tuesday, there was a good zone from P/F on gold, off which you could have caught shorts nicely one last time before the move up began. Now, let's move on to this week. Last week, the market was fun. We saw yet another painted weak NFP with a downward revision, which sent risk assets flying against the USD. Now it's clear why they were stubbornly holding the euro in place with puts and not letting it slip lower. To me, that meant that either someone knows something about the NFP, and when you trade puts, you're always waiting for the futures to rise. Let's quickly look at the FedWatch tool forecast. After the NFP, the 30% probability they were pricing in for a rate hike got wiped out. 45% is left out of 75%. And if the CPI comes down too, then they'll already be trading whether they leave it or cut it in September. Now let's move to the instruments. Let's start with the euro. At one point, 1442. There's the strongest support from the buyers. Monday, Tuesday. The reaction there on the pushdown will be interesting. Above that are the buy targets and the entry points into the sells. The tastiest and most interesting stuff starts at 1.1586. At 1.163.2. There's also a long-standing debt and a good zone to work. At the 1.16 strike, they meet it with calls. Getting above it will be difficult. Through August, the boundaries are marked out. Through Friday, the same. I'll be working the zone at 1.1628 with a stop behind the MVF week. In July, they could push higher. But before July 14th to 15th, there won't be any pops, more like a sluggish drift. So next week will be a bit more boring than the past one. The NFP has already been painted. What's left is to paint a drop in the CPI on the 14th. And for Warsh, before Congress, to say the rate might be cut by year end, that it doesn't necessarily have to be raised. And then out of joy, they'll head toward 1.1765 to 1.1793 by September. And then at Jackson Hole, he'll send all the naive ones packing. And in September, as one option, they raise the rate. Now to the GBP, the MVF of the week and the month. For Monday, there's good support at 1.3250. If they can press through that support, by August they'll take 1.2915. And from there, you'll already be able to work with confidence. Sells no earlier than 1.3582. Taking the zone with the cluster is only possible if the CPI in the US comes down. The cluster confirms Japanese yen. Here they might start painting some nonsense, but I still think they'll climb higher. They just won't let the Bank of Japan catch a breath that easily. The US Treasury hasn't joined the interventions yet, and they'll be waiting for them. The lower MVF is the 166.500 to 167 range on the spot. That's where the market maker and the funds will get into the market, and the Bank of Japan and the US Treasury will step in. But the chance of reaching it is still very small for now. If they drag it higher on the futures, then I'll work with 0.006395. And I'll work the nearest ones by the market too. It's easier to catch the intervention than to catch a reversal against it. Gold. For Monday morning, I'm interested in these zones, and especially 4,080 since some interesting speculators opened up there. And into the close of the short day on Friday, they left a debt at 4,126. Sells by the market, I'll be watching off 4,265.5. On the MVF, I'll work off 4,468, and for now, it's toward that first. The weak jobs numbers gave an impulse and didn't let it make a proper push down to 3,800 for a buyback. On Thursday, there was a chance to buy in. This is what I'll be working, at 4,080 for sure, and an alert on the puts that were opened. I'll try off them by the market. 4,266. For sells, I'll also trade for sure. 4,127 is questionable, and only on a reduced lot, if at all. I don't like the zone itself, even though there are levels and a debt. That's the plan for the week. Remember, these are zones and scenarios I'm watching. The market decides, not me. So let it come to your levels and let the confirmations line up before you do anything. If this kind of breakdown is useful to you, subscribe and turn on notifications so you don't miss the next weekly review. And one last time, so we're completely clear, none of this is financial advice. I don't sell signals and I don't promise profits. This is educational content about the Conflux method, and everything here reflects my own view of the market. Trading futures and options involves substantial risk of loss. Never risk money you can't afford to lose, and always do your own analysis. Take care, manage your risk, and I'll see you in the next one.